Welcome back, everybody, to another episode of Fintech Fridays. I'm Brian Vieaux, President, Chief Operating Officer at FinLocker, and I'm super excited to have on today Andrew Liput. Andrew is the founder and CEO of Secure Insight. And so, Andrew, welcome to my little podcast.
Well, thank you, Brian. It's a pleasure to be here. Appreciate you having me.
Yeah, it's great. I'm looking forward to learning more about Secure Insight. I know your background, is in looks like the legal side of things in mortgage banking as well as some other places. So I'm interested to learn a little bit about how you kind of came about creating the company and the product. And I think I know what you're solving for, but it'd be really interesting to kind of dive in a little bit
Sure.
deeper. But maybe
No, I
just
appreciate that.
yeah,
Yeah.
give us a little backdrop on kind of on Secure Insight, and then if you will, how you kind of came up with the idea and built the business.
Sure. Well, Secure Insight is primarily focused on vendor management and wire fraud risk. And we have built a database, a nationwide database that has vetted profiles of about 80,000 professionals in all 50 states. And the process is a robust risk analysis. So we take data directly from the subjects that we're evaluating for risk. We don't get them from lenders or just from public databases. And so that makes it much more robust. And so we're interacting with people. We're looking at their backgrounds. We're looking at their licensing, insurance, and most importantly, things like their trust account and their internal controls. And then we have a metrics that evaluates them for risk, and we assign them a risk. So we assign folks a risk of high, which is bad, caution, or low. And we've been doing this now for a little over 10 years. And we have, as I said, about 8,000 professionals. We service about 100 lenders across the country. And they're a mix of warehouse banks, credit unions, uh, independent mortgage bankers, and traditional banks who are concerned about getting a handle on vendor management and also on wire fraud. So that's a basic summary of what we do. Um, Most recently, we've started to make our reports available to consumers free of charge so that they could do a review and a search to see who they're doing business with, whether it's a title company, an attorney, or a notary. Give them a little bit more information, empower them to make better decisions about who their partner should be. We just released recently a product we call Win, which is a warehouse bank focused product, and that's just wire verification only. It doesn't get into all the other risk factors, but a lot of the warehouse banks just want to make sure that when they send that wire, it's going to the right place. So
Yeah.
we launched Win a while back, and we're getting ready to launch a repurchase defense and loss mitigation service where we will help provide analytics and assistance in assisting lenders, especially in this market right now, in fighting repurchase demands, indemnifications, and when they discover fraud, either pre or post closing, helping to analyze that fraud and to advise them what sources there might be to offset those losses. And we did that recently because we wanted to branch out into some other services, recognizing what lenders need now, but also because myself and my main partner, Wayne Doctor, and others within our company are all mortgage industry veterans.
Right.
So, we're a tech company, but we're not techies. We've been in and around the mortgage space for, over 25 years, and we have a great handle on the risks that banks face from all sources. So, that's something else we're starting to get into.
That's the part that's fun to me, learning about kind of companies like yours and then understanding the background of the founders and the folks that run the business. And so um, I know in your former life as a mortgage banker, right? These were all real life problems that I'm sure you and your company or the companies you work with were faced with. And so is it fair to say that the idea for the company really grew out of your kind of real life experiences inside of mortgage banking?
Oh, absolutely. I was talking about this risk way back in 2005. I was writing articles in the old mortgage press and going to conferences. But folks were interested, but as you probably know, in the mortgage industry, there's not a rush to embrace new compliance tools, and
Right.
you
Until
know,
there's a need.
until there's a need, right? Until there's an auditor at the door,
Right.
or there's a big loss, and then folks are looking for a solution. So, I talked about it a lot, wrote about it a lot, and I was primarily focused on the risk associated around the closing table, because I felt that lenders had started to develop, good processes for credit risk evaluation and collateral risk evaluation. But then when it came to the closing table, it was just like forgotten. Even though their money was wet, the documents were at the table, they had to hope and
Yeah.
pray they got signed and they were recorded properly. And the fact that folks who perform those settlement functions come from such a diverse group of disciplines. So you have attorneys who are highly educated, but they were sending their paralegals to the closings. You have title agents, you have settlement agents, you have notaries. They all have different levels of education, training, insurance, bonding requirements. So it was kind of like a Wild West. And lenders had absolutely no idea who these people were, because
Right.
for the most part, they were brought into the transaction by the borrower. And many times there were also referral relationships with loan officers and so on. But I think it's fair to say that when the lenders were hitting that button to send the wire out and sending the documents, they really didn't know who was receiving them, nor did they really understand what was taking place at the closing. I always used to say there was no chair at the closing table for the lender, for the
Right.
most part. Right. I think New York was the one exception, because New York had bank attorneys at mortgage transactions, but every other state, you just sent everything and you hoped the package came back. And I remembered that the biggest issue for the post-closing department was cleaning up that mess. Packages coming back, incomplete or things not signed. And then, of course, you had the issue of theft of funds and all the
Right.
other type of garden variety fraud that would take place at a closing. So that just shocked me that the lenders weren't embracing better risk management. And that's what gave me the idea to create something. And my solution was a database, because I felt that if we could take an objective risk standard and apply it to all those various disciplines, you would be looking at them all the same. And then if you could come up with a risk assessment and a risk rating, that should give lenders comfort level before they sent the documents in the wire that they were dealing with someone who was licensed, insured, and was most likely not to commit fraud against them and their clients.
Yeah.
And that's kind of how it developed. And then having worked within the industry, I had a great knowledge of, compliance issues and fraud issues, having studied it and having litigated it, and even been supportive of law enforcement in pursuing a lot of the fraud issues. And so all those things kind of came together, and that's kind of how I launched the company.
So I want to drill into something you've mentioned a few times, which is the concept of vendor management, right? But before I do that, I just had a thought as you talked about some of the risk buckets that exist in mortgage banking. There's the credit risk and the collateral risk, and for the most part, on probably 90+% of the loans that get originated, every lender kind of follows a prescribed course of action by the GSEs as it relates to credit and
Right.
collateral risk. What struck me as kind of interesting here as you were talking, I'm not certain that there is a similar, risk prescription for this type of risk, this funding is at funding risk, and you've kind of scratched an itch there, I think.
Yeah, well, I agree, and that's a fact. And I'm surprised that the GSEs and the investors have not really embraced this more. And the warehouse banks. But a
Yeah.
lot of folks I've talked to were like, well, we have contracts in place where we are indemnified and we could look back, but that's not risk management. That the horse is out of the barn already, right? So.
Right.
But absolutely. And I do know that, our risk reports do get attached to loan files and find their way up to the investors. And I did have some meetings in Washington with like Fannie Mae and Freddie and HUD, and they liked the idea of what we were doing, but in order for them to get to the point where they would mandate something, it's just such a huge bureaucratic
Yeah.
progression. I mean, I do know that, within about 5, 6, 7 years after we started, for example, if you wanted to be a Fannie Mae, if you wanted to be a Fannie seller servicer, all of a sudden the application started asking, do you have a closing agent vendor management process?
Right.
So some of these things started creeping in. As you and I know, because we go back a while, if you had asked a lender 10 years ago, are you vetting your third party vendors? They would say, well, what does vetting mean? I mean,
Right.
I'm not talking about, you were at Flagstar, Bank of America, larger lenders, they've always had kind of a vendor management process.
Yeah.
Anyone who wants to do business would have to go through some level of screening. But when you get talking about vetting those third parties that could potentially harm you and your clients, the consumers, very little, if anything, was ever done about that. And so the one thing I'm most proud of is we kind of made vetting a term of art in the industry. I mean,
Yeah.
after a few years, you started seeing it covered at conferences and stuff. But it still hasn't progressed to that point. You're right. The GSEs, the investors, they should all be, and the warehouse banks should be saying, look, to do business with us, we want to know what you're doing.
Yeah.
And I'll tell you something funny. So I still, we deal with warehouse banks and lenders obviously all the time. And sometimes when we're, talking to potential new customers, they'll say to us, well, we don't have to do this because our warehouse bank does it. And then I talk to the warehouse banks and they say, well, we don't do we're not doing it for them.
Right.
We're relying on our reps and warranties and indemnification clauses. And so even today, there's a big disconnect between a lot of folks and what it is they should be doing or required to be doing. And, it was a huge education process to get where we are today, but we're still not there yet.
Yeah. So the audience that tunes in to this humble little podcast is a mix of the industry, right? There's probably some people in the different parts of risk in an organization, but I think by and large, most of the people that are kind of checking us out are on the origination side and probably leaning towards in the field, on the ground, loan officers. I think we should talk a little bit about why this function and what you guys do and the service you provide is so important to a loan officer. Because I think on the surface, most would think, oh, this is a nuisance. It's going to slow me down. But at the end of the day, from where I sit, my perspective would be, I as a loan officer, I can look my consumer in the eye and feel very confident that they're safe, that their funds, their down payment, all those dollars that are changing hands at the table are safe because of products like yours. How often do you find yourselves in front of that type of audience, kind of educating on the importance of this from a consumer perspective?
Well, we do in the sense that in order to get a buy-in from a lender, many times their different departments have to accept that this is a valuable tool for them. So we're not just talking to compliance people or legal staff. Frequently, we're talking to operations managers. They want to know, as you said, that it doesn't slow down the process.
Right.
I mean, our reports, they're issued instantaneously. And then, from the origination side, they get nervous because, as I said, a lot of these folks are referral sources. So
Yeah.
what are you doing? You're telling me I can't use whatever. I think it comes down to people understanding about reputational risk and what I call renting money. And so from a reputation standpoint, you're not going to have a long career in the industry without a good reputation. And many people get referrals from successfully closed transactions. So from an originator standpoint, I would want to make sure that whoever I'm dealing with is on the up and up, and that they're not going to embarrass me or cause a problem at the closing table that then is going to reflect badly on me. The second thing is what I talk about is renting money. And I used to speak to loan originators all the time. I was in-house counsel to a number of banks, and I used to do training and onboarding. And we would inevitably talk about mortgage fraud and loan quality assurance. And the thing I always said to them was, look, you can't just be focused on the money. You have to be focused on long-term success. Because if you're not focused on that, and if you're not focused on the ethics of it and everything, you're going to close the loans, but you're going to get them clawed back.
Yeah.
because especially today, as you know, there's a lot of, you know, soon as a payment's missed, what's the investor doing? It's taking a look at that whole loan file. And if
Yeah.
there's an issue or a problem in it, it's coming back. And a lot of lenders will claw back commissions because
Yep.
why should they take the hit? So don't rent your commissions. You know, earn them and keep them. And so I think from a reputational risk standpoint and a longevity and financial impact standpoint, who they're doing business with as a settlement agent, as a closing attorney, title agent, escrow officer, notary is important to their career.
What's interesting on the on the Net Promoter Score (NPS) side of the world, I study what Stratmore puts out with their product, and inevitably, you could have the everything work like a champ and just tick like perfect all the way through the process, and then fumble the closing, and that fumble the closing could mean a bunch of different stuff,
Sure.
right? But no matter how good everything was up until that closing, that fumbled closing earns you the worst rating possible, right?
Right, of course,
Uh,
because that's the borrower doesn't really see everything up to the closing.
right.
They have see bits and pieces, and a lot of that sometimes annoys them. Send me another document, send it to me the third time, you know, whatever. But what they really see is what takes place at that closing table. And, you know, this is often said and often repeated, and it's still true. The closing of a mortgage transaction is usually the single largest financial transaction of a consumer's life.
Sure.
They got a lot of money, they're signing the name on paper or doing it digitally, whatever, it's still, and there's still, despite every effort, there's a ton of paperwork that still has to be executed. They're relying on all the folks connected with that transaction. And if it doesn't go right, and forget about like if it takes an extra hour, I'm talking about liens don't get paid off,
Right.
the deed doesn't get recorded properly, you know, payments are not sent to the right place, wires are intercepted. Talk about having a traumatic experience.
Right.
You know, you can forget about having a relationship with that lender ever again, and they're going to tell everyone they ever met what a disaster it was.
Yep.
So the person who's at the closing table coordinating everything, who has that fiduciary relationship with the lender, the direct legal or retainer relationship with the borrower, that's very important. And it's something that was overlooked for a long time. It's not being overlooked now, but I still think that the import of it, the impact of what can happen there is still lost on a lot of folks.
Yeah. I agree 100%. It still baffles me that local loan officers. I understand, if you're writing a loan and it's geographically not feasible to be present, but if you're local and you're closing loans in your community, why you're not representing yourself at the table is just a head scratcher, because nobody else in that room is representing you as the originator. In fact, if you're not in that room and something goes sideways, guess who gets blamed?
Sure, absolutely. Yeah, so it's a bit of a puzzlement still. I think we've progressed significantly from when I
Yeah.
started in 2012. I mean, the pushback we got back then, Brian, was incredible. If I hadn't had 10 years of like research and development and had all the experience I had in the industry, I would have just crawled up into a ball and just closed the company. Because
Right.
we were, I'll be honest with you, it's a public record. I mean, we were opposed by Alta, we were opposed by the Bar Association. I had people calling every regulator in the country. I was getting calls that they were reporting that we were committing fraud against consumers. And I mean, it was just the craziest thing. We even were reported to the CFPB. And I had to go into New York City to meet with their, some of the head of their investigations department. And I sat down with them and they were like, well, what is it that you're doing? And I said, well, before we start, I want you to know that I have the assistant director of the CFPB's cell phone number in my phone. They were like, you did? You do? I said, yeah, I've been down to Washington. I met directly with the CFPB and the person who wrote and drafted that first notice, the Bulletin 2012-3, which came out in April of 2012, establishing the vendor management thing. They had no idea. So I spent the next 2 hours just educating them on the risk that we were addressing and why we were doing it. And of course, by the end of it, they totally got what we were doing.
Right.
But it just gives you an idea. That's only a little bit. I mean, the hate mail, the whatever, because I looked at it this way and I understood. Because when you take a group of individuals who've never been looked at before, and look, I'm a lawyer as well, but the Bar Association has no idea what I'm doing. I pay my dues, I pay my membership in whatever state bar I'm involved in. They have no idea they're not doing any risk management on me.
Right.
If I do something wrong, maybe it'll be reported to the Bar Association. They might do something about it in a year or two. That's the reality. So even the most highly supervised professions out there really don't have someone scrutinizing them closely. So what we did was we went down into that basement, that no one had been into for like 30 years, and we flipped on a light switch, and guess what happened? There was a lot of squealing and crying and whatever. And so we had to overcome all that. And like I said, I understood it. I always told my folks, look, we have to be ethical. We have to understand people get nervous when you're looking at them. But what we're doing is right for consumers and right for the industry. And so it was a long uphill battle, but eventually we got to where we are.
No, I mean, I think, like you said, today, if you were to start your business today, it would be infinitely easier to gain traction because it's like this all makes sense. There's been enough,
Right.
There's been enough bad actors out there that have been kind of tripped up, and this is the right thing for the consumer, for the lender, for all the players in the process.
Yeah. In fact, it's become more sophisticated. I mean, just look at the whole wire fraud issue.
Oh yeah.
When we first started, wire fraud was never even talked about. You talked about theft of funds at the table. You talked about misdirected funds. You talked about title, fraud and, facilitating, straw buyers and things like that. But all of a sudden, I don't know, maybe about 8 years ago is when the wire fraud really started to become an issue.
Yeah.
And it coincided with, the digital mortgage platform and whatever. The lesson there is that the fraudsters always figure out a way to perpetuate it, right? So the fraud that was happening back in '08 during the last blow up, it's still happening today. It just takes different forms and it's more sophisticated.
Right.
So the wire fraud thing now is a huge issue, and that's still a process that requires education. It
Yes.
shocks me greatly to see so many wire fraud incidents taking place when we have so much knowledge now about how to prevent it. And educating staff is a key. Having the proper technology in place. And using a service like ours. I mean,
Right.
knock on wood, we've supervised about 18 million transactions with 0 wire fraud losses. Why? Because our clients will not wire to any account that we have not verified,
Right.
directly at the bank. So, it's a constantly evolving situation. Fraud will always be with us. But I think today people are starting to see it more and more, and with the sophistication and recognizing that they really have to do something.
Well, I love what you guys are doing. I commend you for taking on this task because like you said, it was no small effort to kind of educate and convince an industry that they had problems, and I love the product. It definitely is solving for big problems in the industry. Before I let you go, though, I need to understand what the heck the Civil Air Patrol is, and what do you do as a wing commander there?
Yeah, so I was a private pilot, and the Civil Air Patrol is the official United States Air Force auxiliary. It's a part of the total force, and it is kind of like the reserves, but it's all volunteer. Mostly. I mean, there's paid staff at our headquarters at Maxwell Air Force Base in Alabama, but we have 52 wings throughout the country: Puerto Rico, Virgin Islands, at Guam, I think. And what we do is we perform about 90% of all inland search and rescue, disaster relief. We were huge in COVID, with ferrying vaccines and tests and things and so on. We respond to natural disasters. We have the single largest fleet of Cessnas in the world, and we have trained ground search and rescue folks. We have cell phone forensic teams. We have small unmanned aerial systems that we use. We do a lot of things to protect and assist and support our communities. So as the commander of the New Jersey wing, I'm the commander of 1,400 airmen out of McGuire Air Force Base here in New Jersey, and I spend probably about 20 hours a week on top of everything else I'm doing, managing those issues. And it's a labor of love. It's a way for me to give back to the community, and it is I'm third generation. So my dad flew with the Civil Air Patrol during World War II, because the organization was founded in 1941, and he flew along the submarine lanes on the East Coast looking for submarines who were attacking ships. And then one of my daughters, I have 4 girls, was very interested in learning how to fly, and so she joined. And Civil Air Patrol has a great cadet program that teaches young people military customs and courtesies and leadership training and STEM, and gives an opportunity to fly both gliders and powered planes. So she flew gliders and planes, and eventually got a 4-year ROTC scholarship to Rutgers. So
that is awesome. Yeah. I love it. Well, thank you for all that you're doing for all of us. We certainly appreciate that. Andrew, thank you so much for coming on today. I not only learned about a great company and a great product, but a great man who's doing great things for our country. Thank you so much.
Thank you, Brian. Always good to see you.
And everybody, thanks for tuning into this episode. Tune back in next Friday on Fintech Fridays. Thank you.